Hello traders, Gary Wagner here. Just before 10:30 in Honolulu, 4:30 in New York. It is Wednesday, 7th day of June, 2017, and this is the Daily Report for Gold and Silver. We have some fairly strong downside pressure in the precious metals complex, safe haven assets specifically, as a written testimony comes out that will be the opening statement for James Comey tomorrow when he goes before the Senate Committee on Intelligence. Now, although gold is trading off of the lows today coming in at around $12.85, we are trading off by about $8 today at $12.8940. High on the day was $12.97 and change. And as I said, current print, $12.8940. Now, we do have an active trade currently, and in our active stop, which we moved up yesterday, sitting just below 1280. So, at least for the moment, our current trade is intact. We are still maintaining our long gold position. Over to silver. Silver also trading under pressure today, off about 0.75%, trading at 1757. Low on the day has been 1750. With a high of 1772. So traders, while there is no doubt today's trading activity did put some moderate to strong pressure on gold pricing, we did see gold recover as we went into the close and closed well off of the lows. These lows are sitting right here. When we consider that the low was about 1285, the market closed at 1289. So 1290, roughly about $5 off of the low, and approximately $7 off of the high today, which came in at 1297. Now, this is, in terms of a candlestick pattern, a variation off of a dark cloud cover. And the reason that I say variation is because gold's price did not open above the prior close, which would be right here. And so because of that, it would have to be labeled a variation. You can't really call it a harami because the candle size, the body size of this red candle is much too big and should be much more centered. Now, that being said, I'm not placing a ton of technical strength to the potential that this market could begin to trade lower and dramatically lower. And the reason is that what we're witnessing now is a knee-jerk reaction, and more importantly, it is event-driven. And depending on the events that unfold tomorrow, based on statements made by the former FBI Director Comey, as well as any kind of statements made by the ECB President Mario Draghi and the UK election, we could see, and I believe we will see, some extreme volatility in the market. But traders, it could go in either direction. What I can say on a technical basis when I look at this particular candle is it does not surprise me that we have a moderate profit-taking day occurring. If we look at the recent activity in this market, as this market moved to higher ground, and even before that, as it traded in this pennant or compression triangle formation, what we seemed to get was a spike up in value, and that would be followed by some sort of a very, very short correction or a pullback, another spike up. Again, these small corrections. So you're getting these green candles, and they seem to be followed by a red candle giving up part of the gains. You got that there. You also got that here. And then now we've gotten this once again here. Now, the key to me is we have effectively put a stop in the market. And as long as this market trades above or at 1280, we should be safe. I also believe that this area, if held, should indicate a return and a move above 1300. However, I also believe that this is a fairly critical area, and a break below this particular price point could bring into question whether or not we have just entered some sort of a corrective period. Traders, in other markets that we follow, a U.S. dollar closing fractionally unchanged. It is an uptick. It is a green print, but the dollar did close at 96.64. As I said, fractionally unchanged on the day. Equities have been closed for a little while and are just going into settlement. Now, although they have closed well off of the highs today, They did close in positive territory. And lastly, and most noteworthy in terms of some of the markets that we look at, was crude oil, losing about 5% on the day, trading now below $46 at $45.76, a net loss on the day of almost $2.50. Traders, lastly, do want to take a quick look at crude oil. Crude oil falling out of bed once again, trading off by about 5%, giving up well over $2, about $2.50 in terms of direct value. This is today's action, and it is a pretty large red candle. However, we've seen this action before in crude oil where we have these dramatic drops, and they seem to really outdo any kind of dramatic rise that you see in the market. My sense right now is the next level that we'd want to look at is going to be $45, but I really think that $44 per barrel is in the cards for crude oil over the short term. Traders, even though the former head of the FBI, James Comey, will not testify before the Senate until tomorrow, he did release, or the Senate committee did release, a transcript of his opening statement. That opening statement, while only 7 pages long, reverberated through the financial markets, taking gold and safe haven assets dramatically lower, moving the equities markets off of their highs, although managing still to post a modest gain. And what that tells me is that we've seen some sort of an initial knee-jerk reaction, and the real key is what kind of fireworks and volatility will we witness tomorrow when he actually speaks and not only makes an opening statement, but has to address directly the questions which are presented to him. I think it's going to be most interesting. It should be a scenario in which we've got to hold on to our chair, and it is going to be a scenario, I believe, of extreme volatility. Maintain your current long position, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.